Hello everyone, this is Ageless. So, all right, today we'll be talking about ranging market. So, this is it. This is just a typical example of a ranging market. Can you see? Say a ranging market moves in a horizontal form where buyers and sellers just keep knocking price back and forth between support and resistance. Thank God we've learned what resistance is, the level of resistance. Can you see it at the top? And we have the support below it. So when price is moving in between support and resistance, that is ranging market. And let me tell you, the best form of market to trade in is the trending market. That is the market that we've talked about, the one that goes up, or probably the ones that go comes down. You understand? So with that, with trending market, you can make a lot of money. You understand? But for a ranging market, anything can happen. Price can just decide to go up, and if you like, okay, you want to take a sell here and you place your stop loss above, it will break. It might probably break this line. You understand? So I want you to put your phone on auto rotate so that you can see it from a brighter view. Okay, so this is a ranging market, but opportunity can also be taken from this ranging market. You see, the chart above shows a ranging market. As you can see, the price is bouncing between horizontal support and resistance level. So how do you trade this kind of ranging market? Now look at it. The market started from here, it got to this place, it came down. You understand? It still went up again. So as it keeps going up and coming down, so by the time you now spot that, oh, this is a ranging market, is going in between two horizontal lines, right? So then, how do you now take advantage of it? When it got here, you understand, and it comes down, and you know that okay, it's going to hit this line and bounce up again. Look at it. At this point that it meets the line, you can just take a buy from here. Now, how do you take a buy? You must see some signs like a candle pattern, candlestick pattern. Let me zoom it. I don't know if you can see that small candle there. There is a pin bar or inverted pin bar that is respecting this horizontal line. Can't you see it there? Yes, a pin candle. Yes, this simply means that initially there was a selling pressure, especially that candle. Then later buyers now came in and start pushing price up. That is the reason why that pin bar candle was formed. The moment you see a pin bar candle formed on a horizontal line, on a support line, or probably a resistance line, something like this, you understand? So just know that there's going to be buying pressure. So then here you just once the pin bar close, you understand, then you can just jump into the market. Place your stop loss just below the pin bar, just like the one we did for trending market. Then you target 1 to 2, then you wait until it hits this resistance line again. You understand? The moment it hits, look at it, it also hits the resistance line here, and it formed a pin bar. And funny enough, not just only a pin bar, it can form an engulfing candle. This black candle here is an engulfing. It engulfs the white one. So the moment it form engulf, it is bearish engulfing candle, or if it form a pin bar. And these two candles, we discuss it in this training guide. So you will get to see it later on. Okay, so the moment this pin bar has been formed and it's just jumping, then you put your stop loss above the high of the pin bar, so that price will not return back and hit your stop loss. Then you target 1 to 2. You see that? So that is how to trade ranging market, and these are strategies that I'm explaining to you. Now you already know how to trade trending market, right? When market is trending, how do you trade it? That is what we have discussed. You understand? Now, when market is ranging, how do you take opportunity? Now, that this is what we are also discussing now. So these are strategies that you need to know. Okay. Now let's see if we have any other example. You understand? So this is another example how you trade a ranging market. When it gets sell, look at what happens. They say sell here. You understand? So here, when it touches this line, you buy here, or if it is this one, you buy here. All right. So this is ranging market, and when you buy here, you must target the opposite line. You understand? The resistance line. Okay. So if you sell here, you must target the opposite line, which is what? The support line. That is how to trade ranging market. Now, there are some markets, funny enough, ranging market will not continue to range forever. You understand? It will not continue to range forever. So please, if you have this trading guide, always ensure that you read all these tests here. They are very important. There are some salient key important information that you are going to get from them, because this training guide is very, in fact, it's a world class um world class course which you actually need to. Don't play with it, please. Understand? A ranging market will not continue to range forever. And funny enough, if you don't want to trade within this range, wait for a breakout. You understand? It's just like when you are pressing someone between a hollow pipe. You understand? And the person is trying to what? Pull out. You understand? And funny enough, the moment the person find a way to what? To pull out, the person will pull out with force. You understand? That is called what? Breakout. Now look at it. Breakout strategy is when you look at when you see that the price is breaking out of what? Out of the range. Now that is one of the best potent strategy you can also adopt. Trading breakouts in a ranging market. What will you do? Just monitor the movement of price. The moment it gets to the line and you discover that it has formed this, it closes above. Can you still see this big candle? It closes above the line. This big white candle closes above the line, but this one, look at it, this one here, this one did not close above the line. It only touches and form a pin bar. Now for this one, it form a full body above the line. The moment that full body close, you can enter from there. Then you place your stop loss below it. Then you target 1 to 2. And when there is a breakout, this is a key information I'm giving you now. When there is a breakout, markets usually move high, so you can actually enter with like a big lot size, but I'm not advising that you should be trading with big lot size. Okay, so just know that when there's a breakout from a range, markets usually move high and markets usually move fast. So let me save this video because it's getting too long. All right, ageless. Thank you.